Hello and welcome to Trade Tribe. My name is AJ and I'm your host for today's episode. In this episode, we'll be discussing the economic crisis in the United States. As we know, we're going to look at how US debt ceiling will impact the world economy. On 1st June, the US government was expected to default its debt. And after a long debate of discussing whether they will default or not, the US debt ceiling was suspended or first postponed to up to 2025. Yeah, the US Senate on Thursday passed the bill to suspend the US debt limit on to January 1st, 2025. Yeah, the Senate decision on the US debt ceiling averts the US defaults and averts the major catastrophe that may arise out of the US debt ceiling. But most of you might think, we might think that the US default problem is over. But what we fail to see is the very indicator of the US dollar weakening. Yeah, the fact that the US economy is not far away from weakening down. If you look at the debt to GDP ratio, yeah, that is 77% of the debt to GDP ratio is considered to be the limit of safety ratio. When you look at a country like India, it stands at 83.0%. United Kingdom start at 99%. US stand at 134%. That's too dangerous. And when you look at the graph of 150 years view of US national debt, the graph is on my Discord, by the way. Yeah, you can check the link on the description below. Yeah, you'll see the Discord link there. So yeah, I was saying, if you check at that graph, the 150 years view of the US nation debt, the highest debt to GDP ratio is 103.9% in the past 150 years. The 103% was during the World War in 1945. Yeah, and today is more than the times of the Great Depression. The Great Depression was during the 1929 to 1933. Sorry, yeah, and also the World War and even COVID-19. And every time they has raised the debt ceiling, they increases its further. The US has increased the debt ceiling not once, not twice, but 78 times since 1960. Even though the US government got away again with the Russian aggression, China power, and India's fast growing influence, the US will default one day. When they do it, it will not just shake the world economy, but it will be a pivotal moment in history, which might result into a drastic shift in power. Yeah, so the US will no longer be the power again. Another country will be. So as a business student or as a forex trader, as a forex trader, it's very important to study this macroeconomic situation, because this moment will affect everything, starting from the world power to stock markets to every single commodity traded in the international market. So without further ado, let's try to understand what is debt ceiling, how is it important in the context of US, and what happens when the country violates its debt ceiling. And in the next 10 years, is the US default, how the US default will affect the world economy. So to understand the US situation, we need to understand how countries acquire debt. Just like you and I get home loans, even the countries take out debt in order to grow. We have three popular ways of getting these loans. Yeah, the first way is through international financial institution. Example like World Bank. We have international monetary funds. We have development banks. The second way, they could take loans from the commercial banks, wealth funds, and maybe bilateral loans from other countries. The third way is through something we call bonds. Yeah, and if you don't know how bonds function or what are bonds, you can check it. You can check it on your own, or join the my Discord my Discord community. It's free. You can go read through what are bonds, but I'll explain just a little bit. Yeah, in simpler words, the US needs, maybe let's say the US needs $1 trillion to run its economy. It will convert the $1 trillion government bonds at maybe 3% interest and split it to 1 million units. Yeah, with each unit costing maybe $1 million per unit. So after the bonds is released to the government of China, might maybe buy like $400 billion worth of units. USA citizen might buy $200 billion worth of units. Maybe a country like Blackstone Group might buy another $200 billion worth of units. Japan government might buy $200 billion worth of units. This way, the US will have $1 trillion to run its economy. Since when you combine 400 plus 200 plus 200 plus 200, that is 1 trillion. And in return, the government will promise interest rate of 3%. So every year, the US government will give will give 30 billion in return to its investors, depending on the units that every shareholder owns. They'll get 3% of their principal in return every year. And after the maturity period of maybe 30 years, let's say the maturity period was 30 years, the government will in return get $1 trillion to all its shareholders. But you might ask yourself, why do these countries own the US bonds? Yeah, it's because it is the very safe investment instrument and very safer way to pack your own money. If you have money, you can buy the US bonds, since they are very safe and you are guaranteed that your money will come back after the agreed duration, and you'll get the interest rates. Yeah, the principal amount that you agreed based on the interest. Now, this brings us to the question why US debt ceiling was introduced. I mean, depending on the challenge that the government is facing tomorrow, if they need like $20 trillion, they should just be able to raise the $20 trillion without any hesitation, right? No, but unfortunately, that's not how economics works. So you need to understand how do economics works, because the more debt you take, the more debt you take, the more vulnerable you get. So to put a limit, to put a limit into the debt, the US takes the US debt ceiling was introduced. That was in which year was it? 1947 or what? So as the name suggests, the debt ceiling is the maximum amount of money that the US can borrow cumulatively by issuing bonds. The debt ceiling was created and under the Second Liberty Bond Act of 1917, not 1947, sorry, it was 1917, also known as the debt limit. So this is to make sure that the US does not accumulate unsustainable debt, which might eventually do what? Destabilize the economy of that country. So if they are crossing the ceiling the way they were suggesting, and of which they did, they broke the debt ceiling limit. This is an indication that the US might be taking up an unsustainable level of debt through it, not new things at all. Drawing hit new things at all. So the concept of the debt ceiling started way back in the World War One, when the US debt shot from 3.5% of its GDP to 30.2% of its GDP. And again in the world in World War II, it shot up to 130.9% of its GDP, but dropped to 35.2% in the year 2007. But after the 2008 crisis, you remember the crisis, it started at rising at and went up to 52.3%. That was in the year 2009. And after COVID-19 pandemic, the debt ceiling shot up and to 98.2%, and now it is closer to 134%. This is becoming the US government spending. This is becoming the US okay, when the debt ceiling rises up, like the current one, which stand at 134.6%. This is due to government spending increasing. This is due to government spending. This is because the US government spending increased by 50%. That's why it's standing at 134.6%. This is due to things like tax cut. We have a stimulus package and decrease in tax revenue. For those who don't know what stimulus package is the effort to increase government spending and lower taxes and interest rates to stimulate the economy out of the and lift it out of the recessional depression. So this has led to why today the public debt has shot up to $31.4 trillion, which is 134% of its GDP. So let's look at an example. Like the US recently, it was last year, yeah, US paid $475 billion in just interest rates. And in 2023, the Congress Budget Office, the CBO, projected that that invert payment will total to up to $663 billion in fiscal year of 2023, and this will raise rapidly throughout the next decade, climbing up to maybe $745 billion in 2024 to 1.4 trillion in 2023. You get for reference, $663 billion is more than the GDP of Sweden, Norway, and Israel. And now it becomes and now because they have taken too much debt, there's a chance that the US might default on its debt, not now, but maybe in the next 10 to 20 years. But now the big question is, what will happen if the US default? And every time the US get to this near to this debt ceiling, everybody's worried. Yeah, the reason they are worried is because if a country default, or if US default its debt, there'll be an economic breakdown, whereby the economy of the world will crash. Yeah, that is, if the Congress don't agree to raise the debt ceiling, there will be a default automatically. There must be that agreement between the two parties, the Republicans and the Democrats. Yeah? Anyway, we'll discuss that as we progress, as we proceed with this podcast. But now, if you remember, let's look at how bonds credit are rated. We have the rating and the S&P. So we have the prime, which is AAA. We have the high grade, which is A++ or AA. We have upper medium grade, which is A+ or A. Yeah, these one are based on the risk that they carry. When maybe the bond is carrying a high risk, it might be termed as either AA Yeah, if it's a little bit safer, might be termed as a triple A. You understand? So US has a very high credit rating until 2011. It was considered to be the super super safe investment with a credit rating of triple A. But after 2011, it dropped to up to double A. What does that mean? The double A all and triple A matters a lot. If $1 trillion has a triple A of rating, it's giving out and let's say it's giving out the interest rate of maybe 1%. If it gets a credit of double A rating, the bonds has become more riskier, and the bonds has become will become more riskier uh, yeah, than the triple A rating. So investors would expect to give out higher returns investment of around 1.4% to 1.5% interest. So for the same $1 trillion, the US has to pay 10 billion interest rate to investors into the investors in a triple A bond with a 1% interest rate. But for the same bonds, in the interest rate is increased to maybe 1.5%. In the double A rating, they will have to pay $14.5 billion. The cost of borrowing uh, $1 trillion has increased due to downgraded credit rating. So the increase in the cost of debt leads to drastic fall off of the economy of the country. Yeah, this is whether everything start to from maybe even things like development, poverty eradication, and even to even healthcare. So let's look at the challenges of a default. When a country defaults, what happens? Yeah, credit rating go down. Number one, this is due to this will lead to increase in uh, interest rates. When the interest rates are high, we have less investors because their confidence will go down. When you have less investors, what happens? Your jobs, which will lead to economic slowdown. That's the first way. The second way, again, if the credit rating falls, interest rate will rise by maybe 1 or 2%. But if in case a country default, it might shoot up to 10 to 15% in interest rates, just like Sri Lanka back in the year 2022. Yeah, when there was a default, the government decided to default their debt. There was an economic crisis which was becoming increasingly dramatic, with residents living life saving virtually disappearing into the air. Sri Lanka defaulted $51 billion of its external debt. The bonds interest rate shot up to from 4% to 16%, 1.5%. And when you do the calculation, 1.5% of 1 trillion is around 14.5 trillion dollars. But 10% on a $1 trillion is 100 freaking billion dollars in just interest rates. This could paralyze the economy. All foreigners investors will become scared and start selling their interest. No, the investment. Sorry, this will cause obvious problem like recession, job loss, and poverty. Yeah, just like Sri Lanka in the USA, when the US economy is no longer so powerful with the ability to borrow, the government will have to cut the spending drastically. This could lead to government shutdown. Yeah, layouts of government employees, and it will affect everything from social security payment to military spending. If US default, if US default 1.5 million jobs, yeah, if US default, 1.5 million jobs could be lost in just 1 week. Yeah, 8.3 million jobs could be lost in long run. Stock market will drop down to around 25%, and the banks won't be able to give out capital easily. This means both consumption and businesses will slow down in United States. So 1 week before 1st June 2023, when US expected to default, the the expectation of the US defaulting was low, but in some day in future, US might default, and when it happens, it will lead to a catastrophic because the world is now losing confidence in the US dollar. So, and we all know the wave of we as we all know, the wave of dollarization has already started with the BRICS coming together to to coming together to join and come up with their own currency, which will support their which will be used as the reserve currency of their own. It might affect the dollar, and it will weaken the dollar. If US default, how will it affect the world economy? Now let's look at that. So it will affect the world economy in 4 major ways. The first way, I'll start by giving you an example. Japan holds $1,104.4 trillion worth of US Treasury securities. China holds $859.4 trillion worth of Treasury security, while United Kingdom holds 668.3 trillions. Yeah, by this year, that is 2023. Yeah, by last year, I'm talking about last year, that is 2023. If money printing happens, it will depreciate their investments. So in the second way, US bonds are used as benchmark for other debt securities and a collateral for many transactions. So basically, big nation actually use the US bond as a collateral to get loans from the banks. So if the US default, it could even lead to a liquidation crisis across the world. I think you know what liquidation is. The third way is all the US trading partners will be heavily affected because US citizen will consume less, and since the US is one of the biggest consumption market in the world, it will heavily affect the country that trades with the United States. So the last way, which is the fourth way, countries like Argentina and Zimbabwe that are using the dollar in place of their own currency will completely lose trust in the dollar, and they will move to another safer currency. So what happens if they stop using the dollar? The dollar will depreciate in value and it will weaken. And lastly, considering the new BRICS currency and the rise of the digital yuan and digital rupee, we could be looking at a rise of another giant superpower. Yeah, all a cluster of nation coming together that will act as superpowers. So the default in USA. So the default in USA some days is bound to happen, and all nation needs to be prepared for this D-Day. How and when it will happen, only time will tell. Yeah, so that's it for today. In case there's something that I've not discussed that you feel like you might want it to be discussed, you can leave a comment in the comment section. Yeah, or feel free to text me on my Discord account, my Discord channel. Yeah, and thank you very much for listening to my podcast today. I hope that you found it informative and thought provoking. Be sure to tune in next week for more great content. Thank you.